Hey traders, welcome to Charts and Coffee. Great to see everyone. Hope everyone's having a great morning. Shout out to one of the members, Paul. Thank you so much. Still enjoying the heck out of this mug. Love that it's copper colored. These are amazing, gang. These are Clay Plant Road. Apparently, these folks put out a mug and they sell out quicker than a Beanie Baby back in the day. So hope everyone's properly caffeinated. Time to caffeinate and dominate. Let's get to the charts. Take a look. Actually, before we get to the charts, let's get on over to the economic calendar. All right. So Bot says I'm dating myself with the Beanie Babies. Bot, I could have said Cabbage Patch Dolls. Definitely could have said that. All right, so let's take a look at what we had this morning. Yes, we had the CPI. No, it is not the most important inflation gauge because the one that is built into the models of the Federal Reserve's, whatever logic they use the PCE, right? So when we take a look at CPI, this is one of the two inflation gauges. Anything that is PCE, CPI, ISM, PPI, that alphabet soup is very much part of what gets factored into. The only reason we keep an eye on this thing. These are the target rate probabilities for what the Federal Reserve is going to do for the remaining, I'm looking at the next the remaining 3 meetings for this year. The 20th is a big fat nothing. We are going to get absolutely no change. 95% probability that the Federal Reserve is going to hold. And believe me, gang, they do know when they turn on their Bloomberg terminals, they do know what the overall market is expecting them to do. They don't want to upend that. Believe it or not, they really don't. So if they see 95% probability for a hold, they know if they were to hike, major surprise. I mean, sell off surprise. And if they were to cut, which is not going to happen, again, another surprise. So they do actually attempt to stay within expectations and guide those expectations, right? They can adjust these columns based on what they say. And they know this, although we're in the blackout period right now. Okay, this is where CPI lands. So for those of you thinking, oh my gosh, hot CPI, gang, it was 1/10 better than expected. So, let's not get carried away. And even then, what does 1/10 mean? I'll be frank, I have no idea. It only matters what's here. The target rate probabilities show 56, almost 56.5% expectation for the hold, 41.5% expectation for the hike. What the big change with this slightly, and I do mean slightly hotter than expected CPI is we got some outliers now. In other words, the main two columns in play are the pause and the hike column, 1/4 point hike or just hold for the rest of the year. If you take a look, the two columns that have erupted, just kind of broke the surface here, are really statistically not impactful. However, their sheer appearance tells us that there are these outlier expectations via the Fed Fund futures that are factoring in more rate hikes. But again, this is 0.1%. This is 4.4%. So these are not significant. These are not significant, meaningful levels to expect, but their appearance does tell us something. And that's what CPI ultimately did. Outlier changes. So you can see right here in the notes that I keep when we do our trades, CPI was 0.01% higher than expected, or point whatever that was. I know this is how much I actually care about that number. Next to nothing. There we go. I don't care what the number is. We actually don't care what the numbers are, gang. We care what the reaction is. And what I'm showing you is where to find the reaction. Okay. The next thing is, all right, where else is the reaction? And one of the questions here to kick off the morning, great question from Peter. Hey there, Peter. The question is, after the initial reaction to the CPI, now here's what's really interesting for whatever it's worth. I'm going to get my drawing tools here. Just bear with me. And you know what? Let me make these Oh, the chart is plenty big. All right, so there we go. Take a look here at what we're looking at. This is the chart of the uh, S&P. I want you to take a look at the lower color. In fact, let me just get this comment also. So, Peter, great question. Take a look at the lower row of the 5-minute chart. What color? What color do you see there dominate? What color in this multi-trend do you see dominate? You see the yellow, right? That means it's neutral. It's been neutral since 2 a.m. It's still neutral at 9:06 a.m. So we have a neutral environment. Now, going right into the CPI, neutral environment means what? Well, for me, a neutral environment means I'm going to look at the slow stow, a slow stochastic. If you are looking for an oscillator to identify overbought and oversold, to identify highs and lows specifically in chop, I will tell you, 25 years of using this thing, nothing comes close. It's built into just about any platform out there. Use a 21K, 3D, set it to exponential. These are all settings that you can easily tweak within TOS. Mine look different because I like some arrows and I don't want two lines traveling. I just like the single, and we just keep the D, just the D reading open. So really easy there, gang. Nothing here other than to show you what works really well in a chop. And it's the D2. Oh, it's a D2. Okay, there you go. Okay, so next thing, it's the D2. It's a D2 on TOS. All right, the next thing that I want to show you is in that neutral environment preceding the 830, right? Here's your 830 hot zone. What were we getting? Overbought readings. So that was the ultimate reaction. Am I here to tell you that the indicator knows the future? No, I'm definitely not here to say that. My gosh, the things that grown adults will believe. I love when people say children are so naive. I don't know. When it comes to the equity markets, a lot of naivete. I am never going to say anything leads something else. We cannot tell the future, but we can play probabilities. Please, gang, please remember that. Take a look here. Take a look there. All I'm doing is saying, gosh, if the market's going back and forth in a range, how can I identify the range? HPMRs, hourly price movement ranges, volatility, HPMRs, hourly price movement ranges, volatility, right? So those zones are just going back and forth. And when price sinks in them and we have a little bit of help from our favorite sideways market indicator, gang, this is how it works for me. There's a lot of ways to play this game called trading, right? A lot of ways. I would no sooner tell a golfer that you've got to use a certain club and a certain brand and a certain ball. That's just ridiculous, right? We find the things that work for us. For me, I like really visible automated tools because this way I know that my emotion and what I think and what I feel, as if any of that matters, I will not be biased by those thoughts. I'll just trade what I see, which, believe it or not, is really, really hard, right? So if you're struggling out there, gang, it's okay. We're having to fight all the normal humanness that we all have just to go, I don't care what I think and I don't care what I feel. Just trade what we see. So that was the S&P this morning. I get a lot of questions about, what happens pre-market. Can we track these things? Yeah, absolutely. Very tricky action though, gang, in here. But everything indicated neutral market and that we were toppy before the CPI. It comes in a little hotter. Now what? So if I showed you the probabilities now, and you say, okay, wait a minute, Rog. So this is pretty much a nothing burger. Yeah, it's pretty much a nothing burger. Slightly more hawkish, and I do mean slightly, right? Okay, so that's kind of the rundown of the morning, and I know that's what a lot of us have in our minds. So Peter, thank you for the question. Good stuff. All right, good morning, gang. Good morning, George. Good morning, Dee. Good morning, Nikem, Spacewalker. All right, so next up is, and by the way, gang, we are still undergoing what is at the very low, well, I shouldn't say the least amount of time that you have with me with the current class is 1 month. It's an immersion. So we had the class on Saturday. It's recorded. You can go through that at your own pace. We're recording all the sessions. You get time with moi in the Sector Secrets Mastery. Today we have yet another one of our bonus sessions. So we're going to day trade this morning in that favorite window of mine, that AM session. And then today at 3 to 4 p.m. Eastern, we're going to break down what we did. So rather than watching the live trading going, gosh, Rog, that was a lot. Although I do think of myself as the world's most boring trader, because consistency is boring, isn't it? We are going to sit down together and say, all right, these are the trades we put on. This is what I saw. This is how we took them. And, we're going to tie up any questions that you had for the morning session, which of course are going to happen. So you can still join me over at simplertrading.com/clarity. All right. Mind the Gap says oil. Yeah, I'm with you, Mind the Gap. Yesterday in the free video, I mentioned that one of the best looking trends out there is crude oil. And it's not just crude oil, Mind the Gap. I'm sure you know this as well. By the way, we are in the October contract, or the CLV contract of crude. By the way, there is a micro for crude, making that futures contract more affordable. There is also a USO ETF. And the USO ETF is really cool because when there is some decent liquidity, that is a fantastic alternative to be able to buy puts and calls in an ETF, right? So you don't have to be a futures trader to take advantage of what's happening in crude. In fact, I would really recommend for a lot of you that are watching crude, please keep an eye on XLE. This has been a symbol that has been unbelievably good to us. This is XLE. This is Exxon. This is Chevron. And so there's a lot going on in the oil stocks as crude oil continues to head higher. I talk a lot about index sector stock, right? This is the process that I've been using for pretty much my entire career. Really, I would say mostly in the wake of 2008, index sector stock was not just an idea, but it became really a way of life. Because as we saw the popularity of ETFs exceed the popularity of mutual funds in the wake of '08, you could see the rapid climb in not only the liquidity and the popularity of ETFs, but the sheer number of them. What we realize is most of these ETFs are high concentration weighted, meaning there's a finite number of sectors and a finite number of stocks that have a disproportionate influence on where these things are going. Exxon and Chevron are the XLE, right? Where those two stocks are going, that is where the XLE is going. So once we understand those things, it becomes a whole lot easier to sort of filter through the market and understand why certain stocks are moving and the impact they have on sectors, indices, and on other stocks. So yeah, oil is really something that's wonderfully in play. I would tell you, a lot of folks ask me about Natty. Gang, that the output for Natty continues to really the output right now is far over the demand. So the demand is under the output. We're not going to see higher highs in an environment like that, but not to fret. What is happening is natural gas stocks, much like oil stocks, are doing just fine. Thank you very much, right? You see that uptrend in FCG? So oil stocks are doing well with that higher price in crude, but apparently natural gas stocks are doing just fine with this stable price in Natty. So if you're looking for an opportunity to get into Natty, here's where index sector stock, here's where relative outperformers, both things that are really the characteristics, the touchstones of what I do, are in play here. So I'm trading things that have the best chance of follow through. I'll give you a great example, right? Proof's in the pudding. Who cares what I'm saying? Let's talk about what I'm doing. Yesterday, we took a trade in JP Morgan. But how did we get there? Why JP Morgan? Let me walk you through it. This is what we do every single morning in the Sector Secrets room. I like the Dow. It was a relative outperformer compared to some of the weakness in the NAS. If the NAS is weak, I'm going to keep the S&P on the back burner. But the Dow is pretty stable. Stable, though, not in an uptrend. You know, it was moving higher? Financials. Financials are the number one sector in the Dow. Okay, well, what are the top weighted stocks in financials? JP Morgan is number 2, only behind Berkshire, which I really don't trade. So JP Morgan had an uptrend. JP Morgan is a relative outperformer in financials, and financials were a relative outperformer in the Dow. Once you understand this connection, finding things like JP Morgan become far more easy because it's process driven. So this is what I mean, gang. And this was the move that we took advantage of in the mastery. We just got long calls. That's it. Nothing fancy. No Cirque du Soleil, acrobatics needed. We just got long calls on a dip. It's about as classic and straightforward as it gets. And we'll look to do more things like this today in the wake of the CPI. All right. Let's see here. Larry B asks, if the Fed did hike in September, wouldn't the markets think, okay, they are done hiking now? Larry, we can't even begin to do that kind of supposition because we don't have that as even remotely being discounted. No, if the Fed hiked in September, the simple answer is the markets would be shocked and they would not think they're done hiking now, because what anyone in the know in terms of understanding probabilities would say, what is happening so horrific under the surface that we don't know that the Fed's having to respond to? No, it would cause absolute anarchy. No, no. So I can tell you that because I've been doing this for 30 years and I've seen what happens when the Federal Reserve does not go in line with the highest probability of the Fed fund futures. So no, we can't even though, even then, Larry, we can't even go into that supposition because we don't have the discounting. Remember, the discounting reflects what we have right now. So it's really tough to say, oh, this is the way the market will react. No, gang, I tell you what, if they were to hike, it would be absolutely panic because everyone's going to say, oh, what do they know that we don't know? Right? That's what would happen. All right. Thanks, Michael. I appreciate that. Yeah, gang, if this pre-market or pre-game show here and Simpler Trading YouTube channel, as well as my YouTube channel at Raghee Horner, is a needle mover, I appreciate the comments. I appreciate the questions, and absolutely smash that like button. All right. Tell your friends. This is where it's at. All right. Next up, let's see. Sergio says, I still don't understand what those numbers in the target rate graphic mean or how to read it. Yeah. So here's the Cliff Notes version. I'll show you real quick. Take a look at what it is right now. So that you'll see the current rate is this. Okay. That's all you need to know. This would be, as you can see here, 25, they call basis points. You'll see that right here. 25 basis points more. This is equal to that. That's how we know. I mean, that's it, right? Heaven forbid the folks on TV go, hey, this is all we're looking at. We're looking at a bunch of columns on the cmegroup.com website. But no, we're not going to tell you those things. It's just that easy. I like telling you all those things because I want you all to be empowered to make your own decisions about your own money. Because let's face it, nobody cares more about your money than you do. Okay, so that's it, Sergio. Pretty simple, right? Ridiculously simple. All right, next up. Hey there, Tech Trader Joe. How are you? How are you, my friend? Can't make the reason why I have not adopted the grab candles sooner. Hey, you have now, my friend. You know what? All of us need to take our path to where we are, right? Everything we did in the past, whether that was good, whether that was bad, whether we wish we would have done something sooner, led you to this moment right now. So you got them, and I appreciate that. It is really, really easy. It is really, really easy to understand. Here, let me go to the grab candles. I do love them, but let's face it, I'm biased. This is something that I created for myself. All right, so if I take a look at grab candles, and by the way, Tech Trader Joe, are you noticing how the color of the grab candles, as well as the our multi-trend, multi-momo, the color of the grab, G-R-A-B. Rog, what does grab mean? Gang, never in a million billion years, when I used to sit and talk to my two dogs who would love to sleep under my desk while I used to trade, would I think that I would have had to spend some time being a better namer of my indicators, right? I just called them grab because it stands for green, red, and blue. Thankfully, it made a kind of a word. So that's where grab candles came from. I'm terrible at naming stuff because if you would have asked me 30 years ago when I'm trading, and I started thinking about, oh gosh, maybe I should be better at naming things when I got a book deal. But even then, I'm thinking, you know what? Who cares what I call it? Call it a bologna sandwich as long as you know how to use it. I'm so pleased. Yeah, that's awesome. That's awesome. All right, gang. So I'm going to hop into the simpler options room and my sector secrets master. We're going to trade the morning together. Give me a shout out if you're there. You caffeinated and dominated in charts and coffee. Have a great morning. Crude oil inventories later on this morning could be another opportunity. Be good to each other, gang. I'll talk with you soon.